Hey, good afternoon, everyone. My name is Jeanmonod, EVP of Production here at Angel Oak. We're going to introduce our subject matter experts here in about a minute. We're going to let people log in. Hope everyone's having a great November and getting ready for the Thanksgiving weekend. So, people logging in just to go over something. This is going to be recorded, or it is being recorded. We will get this out to you before end of day tomorrow. Everything we're going to do here is from our website, so there's no PowerPoint. Although I do have 2 slides I do want to show when we get to our marketing portal, but that'll also be included in the presentation that goes out to you guys. So give it about another 30 seconds. People still logging in. Today, we're going to do a deep dive into our bank statement program. We're going to talk about what we look for on a 1003, credit report, bank statements, and hopefully by the end of today, you will be an expert in bank statements and not only reviewing them, but you'll also be an expert in how to find these borrowers. So we're going to really push hard on how to market yourself to find these borrowers. So. All right, let's get started here. A lot of people still logging in. My name is Jeanmonod, EVP of Production here at Angel Oak. I'd love to introduce my 2 subject matter experts. They're usually on these with me. So Eric Morgenson, let's go start on the West Coast first, Eric.
Hello, Eric Morgenson here on the West Coast. We're here to make you money, and we love scenarios.
Yep. Oscar's on the East Coast. Oscar, please introduce yourself.
Well, for those on the East Coast, good afternoon, everybody. My name is Oscar. I've been with Angel Oak for nearly 7 years now. And like John said, I'm really excited that everybody's on. By the end of the call, you're going to know how to pre-qualify a borrower for a bank statement loan. We're going to show you how to price out these scenarios. And Eric's going to end the call by showing you how you can market this program in your area.
Yep. Thank you, Oscar. Yeah, so again, this is being recorded. But before we get into the website and showing you our product overview of bank statements, we're going to do a quick poll here. During this poll, who's originated a bank statement loan for a self-employed borrower in the last 12 months? And while everyone's answering that, I just want to say, since 2020, new business applications have grown every month over month. And Oscar's familiar with this. It's about 450,000 new business formations every month. And that started increasing since March 2020. And we all know what happened in March 2020. That was COVID. And people are just continuing to build their side hustles or full-time hustle. And so this is the fastest growing segment in the lending industry. So let's launch the poll here. See how that. Wow, okay, this is better than most. So 57% have originated a bank statement loan for a self-employed borrower. So the other 43% got a lot to learn here. And for those of you who have, if you closed it with Angel Oak, thank you. But we're going to teach you even how to be a better LO with bank statements now. So Eric, let's give a high-level overview of our bank statement program. Can everyone see that?
Yes.
Yeah.
Okay. Go ahead, Eric. Give us some high-level overview, please.
All right. So for those out there that maybe did a bank statement loan, not within the last 12 months, but way back when, we've been doing these for 10 years here at Angel Oak. And 10 years ago, bank statement loans were wonky. They weren't easy. They were hard to do. And a lot of people really got a bad taste in their mouth. Don't do a bank statement loan. You're going to ruin your realtor relationship. Hey, we have come 10 years from there, and now it is all streamlined. It is as simple as fully baking a 1003, pulling credit. We'll take a soft pull and give us the bank statements. And normally, same day, we're going to give you a full credit and income underwrite utilizing bank statements for income. It's very simplistic. We default by giving every borrower a 50% profit margin, meaning on the other side of that, there's a 50% expense ratio. Now, 50% is quite generous, and normally the DTI works. We want to see max front end and back end 50% DTI. If that works, we move the loan right along into funding. If you need more than 50%, let's say it's a realtor, and a 50% of their income isn't going to cut it, we just simply get a statement by a CPA letting us know approximately what the borrower's expenses are running, and we use that. If they say the borrower's expenses are running, I don't know, 15%, then we'll use 85% of what that borrower deposits into their checking account, either business or personal. Now, if they have a business account and they're a 25% owner of the company and they have a personal account, we'll include 100% of deposits in their personal account. Why? It's just simply them paying themselves. So we have this down, absolutely down pat. Give us a try on an alt income loan that you can't fit in agency because of income and they're self-employed. Oh, that's our specialty.
Yeah. Thanks, Eric. Oscar, tell us, the important things on the 1003 that you're looking for, and then kind of go over some highlights of what we're looking for on the credit report, please.
Absolutely. So on a 1003, we want it to be as complete as possible. Just about the only thing that you're going to leave blank, if your system allows it, is you're going to leave income blank, but do include employment. Now, the analogy that I like to give is complete that 1003 like you're trying to get a DU or LP approved eligible. The reason for that is because, like Eric said, you're going to be sending that 1003 to your account executive to review, to check if your borrower meets the standard program requirements. So essentially, the information that you're giving to your AE is what they're going to go off of, and that information is then going to follow your loan into underwriting. The 1003 is the DNA of the loan. It's going to tell us the full story. Okay, so like Eric said, within 24 hours, we should have an answer for you, and hopefully that approved eligible. Quick qual, which is like a pre-approval, and that's going to contain your next steps for you to request disclosures, as well as your loan submittal checklist.
Yeah, so
and we do this on a TBD property.
Yeah, that's great. Yeah.
That's
So Eric, we're going to start getting some Q&A coming in here. So Eric, first question to you: what if the borrower spouse is W-2'd, or maybe our borrower has a side hustle?
Love that. We'll use both the W-2 income, and if they have retirement income or pension income, we're using that too, plus the income we derive from their bank statement. So what about that borrower that works at Apple, makes 100 grand a year, never wants to leave Apple because of stock options, because of benefits, but has a side hustle programming over here? We will take both that side hustle income via the bank statements and that W-2 income from Apple and use both.
Yeah, that's great, Eric. And Janet's asked the first question here. So Oscar, she's saying, so you leave it blank, meaning the income on the 1003.
Yeah, if your LOS requires you to add something there, you can just put in $1, because we have to calculate the bank statement income. So do include the employment history on there, but you can leave the income blank.
Yeah, great. So Eric, what's the difference? And if you say 12, I'm shutting this down right now. What's the difference between 12 and 24 months?
An additional 12 months of bank statements. Now, a 2-year look back on income is less risk than only 1-year look back on income. And these are all risk-based pricing. So at 80% LTV and above, often you get better rate by about 1/8 if you get 24 months versus only 12. No difference in rate if it's a personal or a business bank statement either.
Yeah, thanks, Eric. Oscar, go over the expense ratio a little bit deeper and why we would look at less than 50 and maybe go even more than 50.
Sure. So Eric mentioned that we default to standard 50% expense ratio. That means that we give the borrower 50% gross profit. The other 50% represents the expenses. So we know that that doesn't apply to every business. So for those clients of yours whose businesses operate at an expense ratio less than 50%, they have the flexibility of reaching out to an accountant or tax preparer to provide them a letter of what that percentage is. And we're not asking for anything complex. We're not asking for a P&L. We're not asking for itemized expenses, just a simple sentence that covers what that expense ratio is as a percentage if it's not 50%, if it's less than 50. The floor expense ratio that we can use is 15%. Now, 15% is really reserved for those borrowers that work from home, that don't have a lot of overhead, that don't have employees. The example that I like to use is that actually make up a good percentage of the borrowers that we help out are realtors. So keep that in mind. So 15% is the floor expense ratio that we can use.
Yeah, so Eric, Anna's asking a lot of great questions here. One, reserves. What do we require for reserves?
We want to see 6 months reserves on the subject property. We are quite liberal on reserves. And as far as these bank statement loans, we also offer them on non-warrantable condos. Yeah. We allow up to 20%, a single owner, single entity concentration. We go as high as 10% deductible. And I know condo insurance is a pretty hot topic out there right now. We allow a 10% deductible instead of 5%. So there's a lot of opportunity. We have niches inside of niches on these programs here at Angel Oak.
Yeah, and Eric, you touched on something too. You mentioned 6 months reserves. We get exceptions on that. 25% of the loans we close here at Angel Oak don't meet our guidelines, and that's why working with Eric and Oscar and all our other great experienced AEs across the country know what kind of loans Angel Oak is going to close. So Oscar, another question here from Anna. She's asking, can gift funds be used? Can gift funds be used, and can they be used for reserves? So it's kind of a two-part here.
Gift funds can't be used for reserves. We do allow gift funds on a bank statement loan as long as 10% of the purchase price and the 6 months reserves are the borrower's own funds. The rest can be gifted from a relative.
And Kyle's given a shout out to Jeannie Cross, one of our account executives in the Midwest. Thank you, Kyle. Appreciate that. Eric, can we close in an LLC?
We can close in an LLC if it is an investment property, but not on an owner-occupied property.
Yep. Thank you, Eric. Some other questions coming in. Great questions, everyone. Keep them coming in. What lost my train of thought, guys. Sorry about that. Eric, this will be one of those bloopers you just talked about. So, no. So, will you use bank statement? And you mentioned this earlier, Eric. Will you use bank statements from all the businesses? The borrower is 20%, 25% or more owner.
Okay, here's the beauty of an entrepreneur. Often, when you're doing a bank statement loan, the borrower doesn't have one company. They might have 7. Okay, now what? How do you go about some guy that's got 7 companies? Obviously he's not going full doc with 400 pages of tax returns, but with 7 companies, now what? All you do is cascade it. You just simply, Mr. Borrower, what is your bread and butter company? What company has the most revenue? So you start with that company. So company A has all this revenue, but maybe it's not enough because he wants a $4 million loan size. So we don't have quite enough income. So you cascade to the second company that has the second most revenue. Because folks, what we're doing is we're collecting all the deposits over the last 12 or 24 months, then adding them together, then dividing them by 12 or 24 months. And that is the gross monthly income. Give it a 50% profit margin or default. We'll use half of that figure for their monthly income. It's really that simple.
No. Yeah, Eric, Janet's asking again about the LLC. I'll answer this. Yeah, Janet, we will allow an investment property to close in an LLC, but owner occupied, we will not. Vicky's asking if the borrower gets gift funds, can they also get seller concessions? I'll throw that out to you, Oscar.
Yep, seller concessions up to 6%.
Thank you. Do we have?
6%, that's a lot, folks.
Yeah.
not only on an investment property, but also owner occupied. That's a lot of money.
Yeah. And then Eric, how about first-time home buyers and payment shock? That's a seasoned question right there. So,
That's right. So yeah, we allow first-time home buyers. There is some additional overlays on that as a part, opposed to FICO score and so forth. And the second part of that question was first-time home buyers and what?
first time, is there a payment shock for first-time home buyers?
Yes, we do have payment shock, but we go as high as 450% payment shock.
Yeah.
450%.
Yeah, and Eric, that's one of those exceptions we get a lot on because, if the borrower has a little bit more down payment, maybe more reserves. So those are, again, working with the account executives and we do this all up front. We do this all up front. I don't know if you said it, Eric or Oscar, we calculate those bank statements for them. We have a team of experts. That's all they do is count that bank statement. So, how do you underwrite income bank statements for 12 or 24 months for the deposit trend increase? So maybe the question, Oscar, is more about why would you go 12 or 24? And maybe someone just started their business 24 months ago, right? Now the last months are cruising. So go ahead.
Exactly. I mean, I think you nailed it. So you have customers who may have started their business 2 years ago. That first year they were ramping up their business. So the 12-month average may not be as strong for that 12-month half versus the more recent 12-month half. That's a conversation that you want to have with your customer when you're taking the application. Just check the date that they started their business. If it was within 2 years, have that conversation. Is their 24-month average going to be stronger or is their 12-month average going to be stronger?
Yeah, so Eric, Frank's asking, he said, sorry, you said the income and the expense default to 50%. What if the owner is sole owner, 100% owner? We still would use what expense?
Well, with that, what does the guy do for a living? Is he the sole owner of 3 factories and has 370 employees, or is he the sole owner of a service, an e-commerce business that he operates out of his house? Folks, each of these are their own story. So we're just going to take a common sense approach and get an idea of what kind of overhead your borrower has. We have you fill out, you don't need the borrower or CPA to fill it out. We have a bank statement questionnaire that you just let us know what the ownership percentage is, and just roughly what kind of a business is it. So we're just going to take a common sense approach on these. Now, if they're a farmer, okay, farmer's got substantial overhead going on with farm equipment, even if they're leasing the land, let's say the fertilizer, it's a pretty involved business, right? So we're going to default giving them a 70% expense ratio. So with that, we're going to use 30% of the revenue that farmer will take in. Guys, it is just all a common sense approach of these. We have ways of massaging these into a funded loan because John, Oscar, our underwriters, all the way to our CEO, nobody at Angelo gets paid a dime on these loans unless we fund it for you. So we have a vested interest in making sure we can, how do I put this, structure your loans so we can get an approval. We're not good at it, we're great at it. We've been doing bank statement loans for over 10 years.
Very well said, Eric. Very well said. Hey, Oscar, Frank's asking, what's the max LTV we will go up to? It's
on a primary residence, the max LTV is 90% with a 720 score. On a second home or investment property, it's 85.
And that's one loan, no MI. That's a second home or an investment property, 85% LTV. That's pretty good.
No MI.
Yep.
Let everybody know in this environment, 90% LTV bank statement loans have a very, very high rate. 85, it's almost a 1.5 points lower. So if they can just stretch that extra 5%, it's dramatic.
Yep. Hey, and we allow gift funds. So that means if you can get gift funds, and that helps with that LTV, or just what you're saying there. Oscar, what if someone has two separate businesses? Will we allow them to use two separate bank accounts?
We can use up to two accounts. If they have two separate businesses or they have one business and they deposit their money into two separate accounts, they just cannot commingle funds. So you want to have that conversation with your client. If they ask you if they can use multiple accounts, Eric touched on it earlier. First, you just want to filter it down to the main account. If they have an extra account, then ask them if they are transferring money to and from each account. If that's the scenario, that you want to choose the one that is strongest. If not, and they are not commingling funds and they manage each separately, then we can use both.
Yeah, Frank, the bank statement calculator is us. We do it for you. So, and again, as Eric and Oscar have alluded to, they're coming back pretty quick these days, right? Oscar, how quick are they coming back?
I mean, if you send it in the morning, typically it's going to be done by the afternoon. I quote, the turn times are about 24 hours, but they're moving fast.
Hey,
Yeah,
Eric,
we're seeing the same day. If you get
yeah.
the scenario in the morning before noon, you'll have it by that afternoon is what we're running right now. And by the way, we'll do bank statement loans for somebody who has not been self-employed for 2 years. 1 year self-employment bank statement loans here.
So great example of that. Oscar, if you got an example of that, the people always like to have tangible examples of that.
Yeah, so let's say that you have an attorney who started their law firm. They've had their law firm for just over a year. Prior to that, they worked at another law firm. We need a full 2-year history in the same line of work. But if the client has owned their business less than 2 years, we can go up to an 80 LTV with a 720 FICO score on a single family home, a primary residence.
Thank you, Oscar. Eric, Vicky's asking, what industries traditionally have the lowest expense ratio?
Well, Vicky, I love the question. Guess what vocation, guess what job, guess what career, the #1 bank statement borrower across the nation, guess what they do for a living? A real estate agent. They're the #1 bank statement borrower. Why? I believe my philosophy is they were the ones first exposed to bank statement loans, so they were the early adopters on these. Think about it, a realtor, they have the broker of record pay them into their personal checking account. They write everything off and they have no overhead. They're seen out of their house. Their overhead are real estate signs and a gas going to and from, or maybe lunch. That's it. So with realtors, we will allow up to 85% of what they deposit into their personal checking account each month. It's that simple.
Yeah, so thank you, Eric, appreciate it. Oscar, a borrower owns and manages short and long-term rentals, runs as a Schedule C. Is that something we could do?
A borrower that owns and runs short-term rentals.
Yep, short and long-term rentals, runs it as a Schedule C. I'm sure you understand that.
So when we're analyzing someone who is a sole proprietor, and we're actually going to touch on that next, and we're going to talk a little bit about the 1099 option. We always want to make sure that there is business visibility. So when a client doesn't have an LLC or an S Corp, something that we can find on the Secretary of State website, we always ask for a bank statement questionnaire regardless. That questionnaire has to be fully complete with a full description of the business. And then we're going to look at those bank statements. And if those bank statements are showing us that the business is generating money on a monthly basis, that there's cash flow on a monthly basis, then it's certainly something that we can entertain. Now, if that scenario just happens to be somebody who every once in a while is depositing some income that they may use for that they may collect from property management, then you can possibly run into DTI problems. You may have months where there are 0 deposits, and that doesn't always qualify for a bank statement loan, which is why we have other options. And I guess this is a good segue to talk about Eric was going to talk about the P&L program, and I'll cover the 1099 option.
Before we step over to there, Eric, can we do cash outs using bank statements?
Of course we can. We love those. We even have bank statement second mortgages and HELOCs for cash out. We'll get to that in a second. That is an unbelievable opportunity. But what Oscar was saying is, if you got a borrower who has rental property and that is their form of income, guys, rental property is investment income. That is not self-employed income. However, if said investment property is in an LLC, now they're a property manager, and that is self-employment income. Again, all of these individual bank statement scenario cases, we love scenarios. Give us a call. We will help you structure the loan.
Yeah, Eric, I'm going to add there that we get asked often a lot. Can we use rental income on a bank statement loan that's being collected from an investment property to wash PITI? And the answer to that question is yes. If that was what the question was, we can use 75% as long as they can provide a lease agreement, and as long as that rental income is deposited into an account that's separate from the one that we're currently using for income.
Yeah, and Eric, here's a good question. If a borrower lives with relatives, parents, has no housing expense, will you hit him with payment shock?
Yes, and those are on a case to case. No mortgage history is a slippery slope when we're talking about alt income bank statement, alt income loans here.
Yeah, but we will allow rent free, but we'll require more down payment at an 80% LTV with a 720 score. I know we just kind of added that about 6-8 months ago, so I had to look it up here too. So
payment shock up real quick, John. Payment shock up to 450% plus on a first-time home buyer. We're looking at 350% payment shock.
Yeah. All right. So Oscar, you talked about 1099. We'll talk about P&L if you want to cover some highlights of the 1099 and probably most reasons why you would go 1099 and not go bank statements.
So I alluded to it. There are the same way that we have an alternative, which is our bank statement program for those borrowers who are taking advantage of the benefits that are offered them through the tax code, right? And don't qualify for a traditional financing using their tax returns. That's why we have a bank statement loan. But there are clients whose maybe just their business model and a lot of them with the way the sales cycle works, a bank statement loan may not work for them either. I'm going to use a real estate agent as an example. Let's say that real estate agent is growing their listing pipeline and not all those properties have sold. So maybe they go a couple months without any deposits into their bank account. That may not count for a bank statement loan because we may have too many months with zeros. But with a 1099 loan, we can look at the last year or last 2 years of 1099s, as well as a year-to-date earnings report, and we can calculate income using the 1099 program. That may be a benefit for that borrower. You get a lot of the 1099 program. You'll have a lot of sole proprietors that are with the same company for at least 2 years. They may be couriers, they may be truck drivers. I already mentioned real estate agents. You get a lot of ride share like Lyft and Uber drivers that are 1099. People that you deal with on a daily basis, your barber may be 1099, or the nail tech that you go to may be 1099. So these are conversations that you always want to start. But these are all borrowers that can possibly get pre-approved for a 1099 loan.
Yeah. Keep the questions coming, Eric. You want to cover some highlights of the P&L?
That's it. We do allow a P&L only if our LTV is below 70% and the borrower's FICO score is above 720. Otherwise, we just want to see 2 months of their bank statement supporting that the gross receipts are within about 15% of what the P&L is saying. And it can be signed by a CPA or a tax preparer. So P&Ls, why would you go P&L over a bank statement loan? Well, let's have a look. We get these bank statements in, and sure enough, Here's borrower Bob over here, who's got 24, NSF checks in the past 2 months. He's bouncing checks more than, LeBron is bouncing a basketball.
You there? He just froze up. Oh, it's not a good look to be frozen on, Eric. So you want to pick up where he was leaving off, Oscar?
I'll pick up where he left off. I think he was going to finish with LeBron bouncing his basketball. I think that's what he's saying. So pick up from there. So what he was alluding to is when we're looking at a bank statement loan, sometimes the borrowers may have a lot of overdrafts or NSFs, and depending on the LTV, that may exceed the max. The P&L loan may be a solution. Another example would be one that I already gave earlier, where if you have a borrower who has many months with no deposits, and it's simply because of the way that their sales cycle works, that may not work for a bank statement loan. But the P&L loan is just like he said, an accountant or tax repair P&L, looking at the last 12 or 24 months. And then you're going to send, whether it's a 1099 loan, a P&L loan, a bank statement loan, you're still going to follow the same process. You're going to submit that to us, and we'll show you how to do that shortly. And then our reviewers are going to be the ones that calculate that income. Most of the time, it's going to be the same day if it's sent in early enough. So we'll calculate that income, and we'll finish up the review by looking at the 1003 and credit report and get back to you. Now, another question that I get asked is, are the parameters any different for a 1099 loan than a bank statement loan or a P&L loan? The 1099 program follows the bank statement program up to the same requirements, 90 LTV. Now the P&L loan is slightly different. So the P&L loan, as you can see, goes up to 80 LTV, but that's for those borrowers that reserved for those borrowers that are going to be providing their most recent 2 months of bank statements, so that we can check to see that there isn't a more than 15% variance between what's reported on the P&L for monthly income versus what's being deposited into the account. If your client needs a P&L only loan where we do not ask for the most recent 2 months bank statements, that's going to get capped at a 70% LTV at the moment.
Yeah, thank you, Eric. You froze up there a little bit, but Oscar picked up the ball and ran with it. So appreciate it. Is business license mandatory? No,
we will do loans for sole proprietors.
Yeah.
And Eric said this in the very beginning. We do these on condos, and we don't treat condos any different than LTV wise or anything else like that. So with affordability being there, condos are a pretty popular purchase these days. Yeah. All right. So we're 35 minutes past. Let's go, Oscar. You've touched on it a couple times. Let's show them how to get a pre-call to us and get those bank statements calculated.
All right.
I'll go back to the home page here.
So you don't need a password for this, guys. All you need to do is go to our website. It is angeloakms.com. And then right in the center of the page, you're going to click on non-QM quick quote. Eric, I think that you're the one who actually says this. Not a single loan funds here without starting with this one step. Okay, so this is how you price out this loan. And then we're also going to show you how to submit those bank statements, the 1003 and credit report, or 1099s, or P&L for calculation. So something that's really important is that make sure that when you get to the income documentation portion of this quick quote, that you elect whether you're going to move forward with a 24-month or 12-month option, whether it's business, personal, if you're using 1099s or P&L, because it's going to default to full doc income. So you want to make sure to choose the correct option so you get correct pricing. And once you're done, you're going to select view rates, and view rates is going to show you the full rate stack.
You know, Oscar, I want to cover that we requested a 75 LTV, right? But this borrower, based on their score, is eligible for a 90%. So just, and then it gives you some highlights here, 24-month season in bankruptcy, foreclosure, housing events and stuff like that. So
Yep.
so go ahead, Oscar.
All right, when you click on the view rates button in blue, that's going to show you the full rate stack. John's priced this out borrower paid. So at 100, this is at no cost to the borrower for that rate. Anything above 100 is a credit that we're returning to the borrower, reducing their total closing costs. Anything below 100 is a cost to buy down that rate.
Yeah, you know, like Jerry, our account executive in Florida, says his 8-year-old daughter runs scenarios there. So it's really easy to use.
It's a really easy tool to use, and it's so easy you can also use it on your cell phone.
Yep. So go ahead, Oscar, take me through the rest of the process.
So at this point, you're not locking in a rate, okay? You're just indicating to your AE, remember, this is gonna follow the submittal that you, for your pre-qual, so you're just indicating to your AE what to use as an estimate for DTI. So John selected 7.124, 100. You're gonna click the blue select option button. Depending on your computer, you may have to scroll up to see step 2. You can skip this step by clicking next. And once you get to step 3, you want to make sure to choose your account executive from the drop-down menu. All you have to do for me is type O on your keyboard and it's going to select me.
All right, I'll do it.
And then you fill in your information. And once you're done filling in your information, you want to make sure to upload the 1003 in the credit report. You can either drag or drop that file, or you can click in the center of those boxes and it'll let you browse for your files. There's a bank statements folder there. That'll capture all 24 months of bank statements. So if you have them saved in a folder, as long as it's not a zip folder, you can drag and drop those bank statements into that folder. It'll capture them all. If the you know, here's a pro tip. If the files are saying 0 bytes, that means it has not captured them. More than likely, you have them in a zip folder, which means that you're going to want to export them out of that zip folder and save them to a separate folder on your desktop. The questionnaire that we mentioned earlier, this is where you can download it. So when you click on that blue button, it's going to open up a separate tab with the business questionnaire, and make sure that that gets completed by your customer, and then you're going to upload it to this folder. And then once you're done, you know, you'll indicate to us, you know, we have a colleague who calls this the confession booth. This is going to be for your AE's eyes only. Okay, so anything that we need to know on this loan, please, please either call us and tell us about it, or you can include any kind of reminder here in the additional comments box. If your LOS does not allow you to, include a property address when it's a refi, then you can include the property address here for your account executive if you want them to look at it. And then once you're done with that, just click submit on the bottom right. Wait for it to say successfully submitted. Then that means that you are in line for review.
Yeah, Oscar, you touched on this a couple of times. What's the turn time with bank statements and time you're looking at the 1003 and credit report?
Right now, we're looking just about same day. If you send in everything, if you look at those bank statements, if you make sure that you have the last 12 months and that, the customer didn't accidentally send you a duplicate, or maybe they just sent you the wrong month, then we can definitely get that done within the same day if it's sent in early in the day.
Yeah, thanks, Oscar. Oscar, touch on a little bit. I had one question come in. We kind of skipped over when we did the quick quote. Talk about LPC and then talk about BPC.
All right. So borrower paid compensation. The definition is right in the name. Borrower paid compensation means that the borrower is paying your broker fee. So any rate that you see when you're pricing out a borrower paid loan, keep in mind that your origination is not being priced into those rates. Okay, so anything above 100 that you see on that screen is going to be a credit, reducing total closing costs. Anything below is an additional cost for that rate in addition to your origination and all other closing fees. When you're pricing out a lender paid loan, that is when us, the lender, can pay a portion of your LPC, or if not, in some situations, it can be all of it into the rate. So when you view a rate at a price of 100 lender paid, that means that we are financing your full comp plan into the rate. Check with your account executive and definitely check internally before pricing that out to make sure that you have, your correct lender paid comp when you're pricing your loan out. And yeah, just give us a phone call, whoever your account executive is, and we can help you out with it. You're not going to be left in the dark.
By the way, those of you new at bank statement loans, here's the beauty of these. You folks are all paid on basis points. Bank statement loans are normally much higher loan sizes than full doc loans. Why? Folks, there's certainly not a lot of W-2 wage earners out there buying a $2, $3, $4, $5, $6 million house. 100% of the time, they are self-employed. Jump in, the water's fine.
Thanks, Eric. Thanks, Oscar. Hey, Eric, let's talk about, let's go back to our homepage here. And let's talk about the marketing part. This is really important. And, we serve the underserved borrowers, but I believe our marketing portal is a very underutilized part of our website. So you would have to log in here. I did it ahead of time because my credentials sometimes work, sometimes they don't. So but you do need login credentials to get in here.
Everything that Oscar just showed you and John, it's open architect, guys. You don't need a password. They did all of that without logging in or anything. Now, to get to our marketing firepower, this is kind of proprietary. This is Angel Oak stuff that we've done for you. We don't want our frenemies, friendly competitors, to have at all of our marketing. So that's why you need to log into the portal to get to the marketing portal. So what John's about to show you guys, all of this bank statement information, it's all fine and well, but it's useless if you don't use it. Now, if you're not getting the word out that you have access to these loans, it's probably the reason why you're not doing a lot of bank statement loans, is because your referral, your sphere of influence has no idea you have access to these type of programs. This is where we need all of your help. We need help getting the word out that these bank statements even exist. Now, guess who is sitting on a database right now as I'm talking to you folks in America? Who's sitting on a database full of self-employed people who are making a lot of money right now, but are renting? Who has such of a database? Your CPAs, accountants are the most unbelievable referral partners when it comes to bank statement loans in America. And guess what? They don't know these programs even exist. What's a CPA's favorite all-time tax deduction? It's the mortgage tax deduction. You can't write off your mortgage in Japan, can't do it in Mexico, Canada, England, Germany, France. We're the only country out there that allows you to write off a portion of your mortgage as a tax deduction. Accountants love this deduction, but get the word out that you guys, to your accountants, that you guys have access to these programs, and let your accountant network start referring these borrowers to you.
So Frank, Frank's saying, what's Eric's position at Angel Oak? I think he missed his calling.
Rainmaker.
Exactly.
John, would
do you
you
want to talk about some social media posts
for me?
What's that? All right.
So once you guys, you can see you can customize these flyers in your name. You can put your picture, your logo. You see they're white labeled. They don't say Angel Oak anywhere on them. And once you've filled out this information on the left, it saves it to every one of these flyers. So whatever flyer you pick, he's going into the bank statement HELOC flyer. But we have a flyer for CPAs. And what's going to happen right after January 1st, people are going to start contacting their CPAs to do their taxes. What a wonderful time to get this out in front of CPAs and let them know that their wealthy self-employed clients can not only buy a house, but maybe buy more real estate out there using bank statements instead of full doc, because they're doing their job. They're writing off the kitchen sink and hardly showing any income to the IRS.
It's taken a while for these lately, Eric, to download. So let's talk about the social media posts.
Social media. folks out there that are not doing social media, here's the slippery slope on social media. It's not a one and done thing. To be effective with social media, you gotta be consistent. You gotta post weekly or minimum monthly. Get it out there, get a regular post going. Well, we've already plowed the driveway for you. We have so much social media content that literally you can pick your font, pick the kind of graphics you want. We've already written the text. These are compliant. And literally we're giving you a year's worth of social media to be able to post. Now you can go in and edit it to your personality however you want, but look at, we've already put together all the content for a year-long social media campaign for all of you guys. How easy is that?
Yeah, Eric, I shake my head here sometimes because I do believe it is truly an underutilized portal here. And we've done it all for you, whether you want to direct your marketing message at a borrower or borrowers or a realtor. It's all done for you. It's just copy and paste. It's really, really, really easy. And last but not least, Eric, let's talk about, our, and here's the old bank statement HELOC one downloaded here. So let's talk about,
Oh,
Eric, what were you gonna say?
I just want to,
Talk about presentations, Eric.
so we have these PowerPoint presentations for you, but here's the deal. We want you to lean on your local Angel Oak account executive. Why? Your local Angel Oak account executive will actually go and co-present to real estate offices for you. And they don't show up with their own business cards. Nobody needs to know that they're from Angel Oak. You can introduce them as an underwriter or a program specialist, and they can field whatever questions those real estate agents are throwing at you. They can field all those questions for you. So bring along a guideline expert to a real estate presentation. Now, here's how, just simply set up your local realtor, say, hey, listen, we have some interesting programs that your real estate agents would be very interested in, and show up at lunch or a breakfast meeting. And here's the running bet. You put an Angel Oak AE in front of at least 15 or more realtors in a presentation. One or two are going to come up after that presentation and want one of these loan programs for themselves. Most likely a DSCR loan. So you're going to walk away from a realtor presentation with a loan or two.
Eric, 9% of the loans we close at Angel Oak for bank statements are realtors. So do the math that Eric just said. You get 10, 15, 12 in a room, whatever, you're probably going to get at least one of their loans. Eric, one of the other things I wanted to bring up here, because we did a, let me know if you guys can see this. Hold on. I'll make this a little bigger. Because Eric, after, we do a survey after these presentations, and, sometimes people say, where do you find these borrowers, Eric? And I always use your line, right? Open your front door, right?
Yeah, walk out your front door and you're going to trip over a self-employed individual.
Yeah, so let me so who are bank statement borrowers, right? Eric, we said professional and business services, realtors, transportation and trucking, dependent upon where you're located. I'm in Dallas, Fort Worth. It's a big hub for trucking. These are just some ideas that, like Eric says, everyone in a strip mall is probably a self-employed owner of that business. So
it's unbelievable how the general population out there in America has no idea bank statement loans even exist. They don't know.
Yeah. And then Eric, and where to find them? I don't know. I know you're getting a little hoarse there. Oscar, you want to pick up where to find these type of where to find them?
You definitely, Eric mentioned it earlier. You definitely want to reach out to your CPAs, your tax preparers, anybody that's handling taxes, that are working with self-employed individuals. A huge referral source is going to be a business banker. You want to go to your national, your regional banks who have business bankers that are sitting in the office. They deal with business self-employed borrowers. daily. And you know what? Sometimes those borrowers turn to them to help them get a loan with a bank, and they get declined. And that person does not want to leave them hanging. They'd rather be able to refer it out to somebody who can help them out for some added value. And you should be that person. So you want to make sure to visit this site. Please reply in the chat now if you don't have any sort of credentials or if you're not set up with us. This way, an account executive can reach out to you after this call, and we can get you set up so you have access to all this marketing material.
Yeah, thank you, Oscar. You know, I put my contact information up here too. So if anyone wants to contact me, you know, after this presentation, we'll get you hooked up with your account executive or even credentials. So Oscar, anything in closing that you want to share? You're always good. No pressure though.
Well, for the 43% of you that, or 45% of you that have not done a bank statement loan, you know, jump in the pool. We'll be your lifeguard. We're not gonna let you drown. Please reach out to your account executive. We'd be more than happy to schedule a follow-up call with you. We can go into detail on any requirement on our matrix. It's a very simple program. You will be an expert in 1 or 2 conversations, and we'd be more than happy to help you present to all your referral sources too.
And Eric, anything else in closing?
Folks, we also do bank statement cash out seconds for all of you folks that did do a bank statement loan in the past 12 months or in the past in general. That borrower is self-employed, and that borrower is looking at all of this dead equity in their property. Why is the equity dead? Because they can't go into a credit union or Wells, Chase, B of A and get a HELOC or a second, because that's a full doc loan with a 43% DTI. We already know that they qualify for a bank statement loan, and never, ever underestimate the desire for an entrepreneur or a self-employed individual to get their hands on capital. Oh my gosh, they want capital. Why? They can take 100 grand and turn it into 100 grand through their business acumen, through their company. Or they might be stressing over making payroll, or they might be fiending to go buy some inventory for their company. Folks, this is the lowest hanging fruit ever in the mortgage industry. Contacting your past bank statement loans and offering them a $750,000 HELOC or closed-end second. And we know if they're applying that money towards their business or paying business debt, it's 100% tax deductible.
Yeah. All great points, Eric, and I appreciate you. And Oscar, you know, thank you for your time today. This is being recorded. We will get this sent out to you before end of day tomorrow. But for everyone, thank you for joining us. For any of you that have closed loans with Angel Oak, we appreciate your business. For those of you who have not, you can tell by the subject matter experts we have here today, we will definitely take care of you. So if we don't talk to you, see you again, or hear from you, have a safe holiday, and give us a shot. Here's my contact information. Let us help you grow your business. As Eric says, let us help you make some money. So have a great afternoon, and please reach out to us.
Thanks, John. Thanks, Oscar. See you
John.
guys.
You guys.
We love scenarios.